You're almost 100 days into the new Trump administration, and you have very little to show for policy, and investors' expectations still remain very, very high. Investor optimism is at a 16-year high, and that's based on the assumption that we're going to get those tax cuts sooner rather than later. So if we don't see those tax cuts, you've got a market that may be ahead of the fundamentals. Look, the economy is better than we probably expected it to be at the time of the election. GDP revisions for the fourth quarter were better. Unemployment remains better. And so the reports of my death are greatly exaggerated, as Twain said. But at the same time, you need to see those sooner rather than later for the market to be happy and not to be disappointed. And nobody wants a disappointed stock market this year.
Larry Glazer, then handicap the rest of the year for me. Let's assume we get corporate relief, not individual relief. Then what?
You know, Neil, it's interesting. The timing is so critical. And again, that congressional calendar is the enemy of this administration.
Indeed.
The window is really narrowing to get all these things done. And I think that's the real issue that investors haven't quite focused on. What's fascinating to me is, although the Trump agenda appears to be losing some momentum and fading, and you see the Trump stocks, the financials sort of losing momentum, small caps losing momentum, the biggest beneficiary of corporate tax reform is a company like Apple, who has $250 billion overseas, gets a huge benefit if they could bring that back through lower corporate taxes. And that stock is up huge this year. So I think investors think this is going to happen. They just think it's going to happen in the second half of the year. So again, we'll hold out hope that this will come to fruition, but the markets may take a pause and may want to see evidence before moving higher.